Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week, New Year's special. It's a look back at what happened in the past year and a look forward at what might happen in the next year, and hopefully some great ideas and opportunities for you throughout the show. In this year-end look at the markets, we take a bigger look, really, as we review what we said in the past year, last year's predictions, and we look at 2017 for stocks and for the markets. This last week, a holiday shortened week, slow as we pretty much expect. The last couple of weeks have been that way. And we saw somewhat a reverse flow of money going on as stocks that had some pretty good rallies had some pullbacks, and the bond market, gold, and the euro and the Japanese yen all had rebounds as money just simply went too far, too fast into a lot of the markets, and there were a lot of very depressed markets that got some bounces. And that's what happens as you get towards the end of the year and into the beginning of the next year. So the Dow Jones Industrial Average flirted with 20,000 a couple times, but then actually backed off by a couple hundred points. But we think that something in January is coming that's going to get us testing those numbers and maybe beyond again. The stock market for the year, the big January swoon was erased pretty quickly in a steadily up-moving market through the rest of the year. Yeah, there were some big dips in the middle, but then the market just kept going on the upside. January 14% swoon, well, didn't mean a whole lot on the market. That ended up pretty good for the year. We saw the Dow Jones Industrial Average gain about 13%, S&P 500, well, just under 10% gain for the year. The NASDAQ about 6%. That was kind of a laggard. In the major indexes, the star performer was the Russell. That's up almost 20% on the year, but really have to mention the Dow Jones Industrial and Dow Jones Transportation Average. That's up 21% on the year, and it made a huge catch-up move, up about 13% since the election time, and then moves up to a new high, and that is a Dow theory bull market confirmation. Do you need a confirmation that this has been a bull market? I don't think so. Well, that tends to be an indicator that comes really late. So that's what happened basically in the last week. And most of the show now is moving forward. We're going to talk a lot about what we see coming in 2017. Before we do that, let's take a quick peek at what happened in this last week in the 60-minute chart. So here is the 60-minute chart of the S&P 500, and you can basically see that there were a couple of failures there in the Dow Jones Industrial Average as it made a good attempt to get up to the 20,000 area, couldn't quite get there. It backed off here, as you could see. It backed off here, as you could see. And throughout the week, basically, the market moved down. Markets were pretty much in a coma throughout the week, and not that much really going on that we can say was monumental. The rebounds that came in the euro currency, in the Japanese yen, those were pretty good on Friday, and the bond market did have a pretty good rebound during the week. Let's just take a quick look at the calendar for the coming week, and you can see that right here, and you will see that we have a couple of big events coming. No real earnings events really going to come until for a couple more weeks into January. And we have on Wednesday the FOMC minutes comes out at 2 p.m. Eastern time. And then on Friday we have the employment numbers come out. So that's basically a look at the major numbers for the past year and what we have had in this last week and what we're looking at coming forward in the next week. Always a tricky week. And then what happens in the beginning of the year is like they flip a switch. So who really knows what happens in the beginning of January? Well, we'll only know that in hindsight. So, what did we think would happen in 2016, and what are our predictions for 2017? We're going to get to that in just a moment. But before we do that, I want you to please do watch this short video coming up. At the end of the year, we do a lot of introspection. We really look at what's happened in the last year, what our challenges have been, what's really worked, and, there's a lot of ways we look to do a reset. We created an amazing video workshop that's going to help you with that in a lot of ways. So I'd like you to just watch this brief promo that we're going to share with you right now. And I think that will help you get ready for 2017 and really raise your odds of success in the financial markets. When you get done watching this, then just go to the front page at askSlim.com, click on the bottom on the puzzle piece that says 5 essential building blocks to successful trading. You'll get some more information there about it and how to sign up. I hope you spend some time and look at that. And after that, we'll be right back with our review of 2016 and our predictions for the coming year. Be right back. I want to take just a few minutes to talk to you about our new video workshop, the 5 essential building blocks to successful trading. Well, it isn't exactly new, as I've given it a lot of times live, but I wanted to make it easier for people to benefit from our work and put it into a video series. This is not like any workshop that you've ever seen before. We don't, advertise that we're going to give you the winning system, that system that gives you the 1,000 or 2,000 or 3,000% return on the trade. This is much more different. It's about you, or really it's about me, because what I give in here is an expose of my 42-year history, talk a lot about the lessons I learned and the pain or the challenges I suffered along the way to learn the lessons, so that you don't really have to do that. You can learn from what I experienced. This talks about the forces that are within me that really brought volatility in my history as a trader, and that may actually be doing the same thing for you, or many other things that may be challenges for you in trading. So in the intro, I give you all that history about me, and then I tell you what's coming in the next 5 videos, which I'm going to do right now briefly, give you a little bit of idea. Here is the 5 essential building blocks to successful trading. So in building block number 1, we talk about the underlying causes to the success-failure cycle. That cycle where, you're doing really well and all of a sudden you get into a slump. There's often forces within us that, bring poor decision making. I share mine, what those negative forces are and what has, really driven me to, a lot of emotional swings throughout, especially the early part of my career. And I help you find that about you, what brings these repeated behaviors that bring challenges to you in trading. Building blocks number 2 is about the reactions that we have, those emotional reactions. They're often really strong. That goes really hand in hand with what we talk about in building block number 1. That stress, the disappointment, that negative self-talk, the feelings of fear or shame or anger when things start to go wrong. So what we talk about and what we do in here is give some really good processing about how to build emotional fitness. That's really what number 2 is. Number 3 is, matching style, method, and personality. And what that means is that, we often struggle with style and knowing what, the right vehicle is for us to trade. And then, when we try to figure out what's right, we're not exactly sure how to match up those analytical tools. Also, there's sometimes mismatches in our personality and our experience in the market and our account size and our risk parameters that we designed for ourselves. So this is all about getting balance. And once you find that balance, actually, that really helps with what we talk about in the previous building blocks, about the things that trigger those emotional reactions that could really get us into some trouble. Building block number 4 is about discipline. We look at 6 areas of discipline. It's not only about taking losses properly. So what we look for is getting in the right mind frame to be really focused. That helps us really stay on a plan that we build. And when we do that, we really can build greater knowledge. So the more discipline we have in all areas of our life, and that's what we really talk about, is discipline in life and in trading in this section. That really helps us to be a much better trader, much calmer, much more balanced in our life. Building block number 5 is about designing that plan, that unique plan, the basic design, understanding the win-loss ratio that we need to have to be successful, and about, reasonable expectations of returns, and how having, unreasonable expectations can really throw off our level of success. And it's about how to create that winning formula, the unique one for you. So, all of this really has got an overlay to it. It's all about keeping ourselves totally balanced and really helping us with how our emotions might get in the way of that. So that's really the overlay. It's about this being in balance and everything about our approach to trading, everything that we learn about trading, the way we engage in the markets based on who we are, and about how we can keep ourselves from getting set off by the emotional triggers. Really about being the best trader that you can be. All the things that we're going to cover in here, you might hire a coach or go into some programs and spend thousands and thousands of dollars for the type of things that we're going to talk to you about in this. This is nothing like that. I mean, a couple $100 is an unbelievable amount of money to pay for the incredible amount of knowledge that we're going to share. Every one of these videos has got a worksheet that comes with it. You'll be able to do some homework around integrating the things that we're talking about. There is really an unbelievable amount of information in here to really help you get balanced. I mean, we really wanted to keep it very affordable. And I share with you the experience that I've had in 42 years. As I said earlier, this is about you being the best trader that you can be through the lessons that I've learned in trading in the markets and through integrating many other aspects of the lessons that I've had in all this period of time. I think you'll find it amazing, especially for this incredibly low price. Go to the askSlim website, go up to workshops, click on the 5 essential building blocks to successful trading, and you will see there more of this information, and you'll be able to sign up right there for this reasonable price. I really hope that you take the time to take this great 6 video series. Thanks very much for listening. All right, here we go as we move into our review for our 2016 calls, and as we look at the stock market, other markets, and the stocks that we thought were the best and the riskiest, and then look into 2017. Predicting really is a losing game, and I always say I'm crazy for doing this, but it's fun, and I really think that our analytical style is really helpful, and we're more right than wrong, and that's always what counts to me. What I do when I do these is I look at themes, really, what I think are the politics or the different sectors that I believe are going to do well or do poorly in the market, how they've done in the previous year, whether they're overvalued or undervalued, and really look at an assortment of things as we do this, besides the technical patterns that we look at. So we're going to look at 2017, really saying that there's a lot of questions there about what could happen, and certainly it's not going to stop me from giving my sense and my opinion about the coming year. So this year, we're going to say, as we look into this, as far as the markets go, this was not my best year. Ranges were wider than I expected in the major markets. The stock market, which did what I expected early in the year, then had a much better rally throughout the year, and we saw gold move above the levels that I expected, the dollar not get as low as I expected. So it was a year where I would say it was challenging for me as far as the big markets. I think I did better the previous year as far as predicting highs and lows for the market. For 2016, I thought that the oil market would have a good recovery, and it certainly did. It had a wider range, but our timing was really good. We thought the low would be 33.40, the high 50.80. It was a wider range than that. Gold market, we basically tagged the low. It was 10.45. We thought it would be 10.60. We thought it would rally up to about 12.52 or more. Of course, it did go further. The dollar inverse to the gold market, we thought would do a lot worse. It fell into the mid-90s. We thought it would get as low as 90, and then we thought it would get only as high as 102.50. It got higher than that as Trump got elected, and a lot of issues there in Europe also that helped the dollar even get higher. The bond market, we really had the right idea in there, and throughout the year we were really on the movement also. The low we thought in the 10-year would be 114.20. It did not get that low. We thought the high would be 127.21. It got above there into the 133 number. So the panic in the middle of the year into the bond market, based on Euro situation and what people thought would be a slowing economy, got it up higher than I expected. And the Dow Jones Industrial Average did much better. We said in the beginning of the year we thought the high would be in the first quarter. Well, it looked that way for most of the first half as the market fell so hard in January, down some 14%. And then we thought the high would only be about 17,800. It actually did better than that by almost tagging 20,000, right? So the Trump rally really helped the market, but it had gotten above what the levels were anyway that we thought were going to happen. So as far as stocks go, let's take a look here at what we thought would be our best stocks. We reviewed this at half point in the year, and our average stock of the 12 that we thought would be the best was up 42%. We never thought we'd really hold that, and thought that was pretty much impossible, and we actually did a nice job on that. Take a look here as you look at what our favorite stocks were for the year, and you can see VA got bought out, up 57%. So that one, was not even in the list at the end of the year. We were 9-3 for 42% at the half-year point, and finishing 10-2, 10 up, 2 down, with an average gain of 41% of the year. We'll call that one spectacular. I mean, really just a great performance when you look at that. Believe me, I would take half of that in our winning stocks in the coming year. When we look at what our riskiest, we called it our dirty dozen last year, were, of these stocks, the average stock was up 13.7%. So our average winner up 41%, our average, what we thought were the riskiest, up 13.7%. Well, the ratio is sure good. And so were the totals. Big upside market. There were 8 winners and 4 losers in here. Note that the 4 losers were not down very much except for Trip. 3 of those were down, fractionally or just about 1%. So it was just to pick out some stocks that would be flat or down in this year was pretty good. So we would say overall, our stock selection for the year was maybe even spectacular. So that's the review of 2016. Not so good on the markets, and really exceptionally good on the stocks. Let's stick with stocks right now and take a look at what we think are going to be our best for 2017. So we go through this list and really start thinking about valuations and themes, and what we think have the highest probability of the biggest percentage gains. That's really the way we look at these. Sure, there's going to be a lot of other stocks that we think could go up or down, but we're kind of looking at best opportunity for the best gains. And this is my favorite 14 stocks for 2017. Take a look at these. Now you could take a look here, and I'll briefly tell you what I like about these. The first one you're going to look at is American Airlines. This to me is the best value in the airline category. And when you're looking at growth being good next year, based on Trumponomics, they're going to be looking for valuations. American like a 5 PE. For a CSIQ, if you look at that one is one of the fallen stocks from last year, down 50-something%. This is a fantastic valuation. I've been wrong on this one before, but I think this one has got some good possibility for gains. It's the same thing for First Solar. Now, CSIQ, First Solar, these are like 6-7 PEs on here. These are real companies that earn real money. CSIQ is going to earn like $1.95 in 2017, and it's a stock that's trading really only in the low teens. So a lot of opportunity, I think, in those stocks. FCX. Now you think I'm crazy on this one because it's had big moves already. We think it's going to be a good year for copper, and another one for materials overall, and this one has got some great earnings growth potential in here, so we're liking FCX. That's Freeport McMoran. In the next two stocks, we're going to look at Lennar and Pulte Home. Now, these stocks have been under pressure because of interest rates going up. Now, when interest rates, first of all, I don't think interest rates are going to go up as much as people think. I think it's going to be a missed opportunity by the FOMC, and I don't think that 2 or 3 increases in interest rates, pushing mortgage rates up into the mid to high 4s, is going to stop this. In fact, an inflationary expectation helps home builders. My God, these things did really well with mortgage rates at 6, 7, 8. So these two, I think, have a lot of opportunity. Now, the gold stocks, silver stocks, had huge pullbacks late in the year. I think there's going to be another move into gold during this year, and I think these are going to give you some of the best opportunities. And when you look at Bitcoin moving up into the 900s again, there is somebody out there that believes that inflation, or the dollar, is going to, the inflation showing to the upside and the dollar moving to the downside is a likelihood. And I also think that's a likelihood. So you can see by the two things I have on the bottom there that I'm thinking the dollar is not going to be the favorite currency. So those are the three: AU, AG, a silver stock, and GG, Gold Corp, ones that I think are going to be good. And GDX, therefore, is on the list again, I think, for good potential movers. Intel, this is a really revived or reborn stock. I think the semiconductor industry is going to remain really good, and I think Intel is going to be one of the best movers in the tech category, along with Seagate, STX, in the huge demand for storage, for drives. I just think that Seagate's going to do fantastically well in a really beautiful pattern in there also. Now, in the currency category, I think the dollar will be the fallen giant this year. I think the recovery, I think the euro will have a lot of problems still and not be able to make any real upside ground. A lot of problems there as far as the theme for the year being the eurozone has got problems and a lot of elections that are going to look like they're more nationalistic than anything. So I think that the euro is going to have problems, and I think that the dollar is not going to be the go-to currency as it was. I think the British pound gets a big rebound, and I think that the currency of the year and maybe the trade of the year is in the Japanese yen. So those are the 14 symbols that I think are going to be the best for the coming year. Now, here is what I think are the riskiest for the coming year. And you see in here there's some stocks that have done really well in there. PNC Bank, a 16 PE on this stock, trading up near the high of the year. This is just an immensely overpriced bank stock, and I think that one has got a lot of risk, along with Northern Trust. Northern Trust at a 20 forward PE. This is crazy. I mean, this stock could lose easily 20% of its value in this coming year. FDX and UPS, the next two we're going to look at. I think Amazon and all the online sellers are going to put immense pressure on these guys as they find resources for delivery that are outside of the realm of FDX and UPS. And I think that major tops are in place in those stocks, and I think that they're going to do poorly for the year. Caterpillar's had a big gain. Now, I'm going to talk in a moment about themes for the coming year, and this one at a 33 forward PE is just immensely priced for infrastructure building that might come throughout the year. So I think that one is just hugely overpriced and has good downside risk in there. Rockwell, extremely overpriced in the defense category, and I think that when people get a whiff of how defense spending is not going to go up overall that much, Rockwell, which is just hugely overpriced, is likely to give up a lot of ground. Visa and MasterCard, they are making major top patterns that I see in here. And again, it's, all the online sales, there's really maybe some alternatives that come up that aren't as high cost for transaction fees. Transaction fees could be under pressure, and I think I see big tops forming in Visa and MasterCard. Domino's Pizza, DPZ, I mean, this one, there is no room for mistake in there. This one trading at a 33 PE, near all-time highs. That's a 33 forward PE. And there is just absolutely no room for error. And I think that this one is amazingly overpriced. McDonald's, major top formed in there technically. I think that this one has got a lot of risk on the downside. JCPenney, I continually talk about that one. I think it's going to $2, and I think bankruptcy is going to be in the wind in that stock in the coming year. UAA, a broken stock that's been near its lows and I think really struggling. The pattern is very negative in there. So here is the bold calls for the year, really. The riskiest in this risky category may very well be the FANG stocks. I see big negative patterns forming in there, big tops forming, and therefore I think that the NASDAQ is going to be the big underperformer for the year. Facebook, Amazon, Netflix, and Google, I think they have major tops in there. If there was one that I thought had some potential upside at some point in the year, would be Amazon, and that one still is up for a lot of potential disappointment as the PEs in these stocks are dangerously high, and the patterns in there are really poor. Cree is just a poor execution company. The valuations are crazy in there, even though it's a beaten up stock. I think it's going even lower. And CRM is the next one, which I think is a broken down stock with an extraordinarily high PE, and I think actually is a stock that has a ton of risk still. So that is a look at my best and the riskiest for the coming year, and that certainly is a big list in there, and I'm sure looking at those FANG stocks, that would be a surprise to you. So let's talk about the coming year as far as the markets go. There's so much in question this year, really, as we look at all of the potentials for what could happen in the coming year. Let me start with, will Yellen survive in this coming year? Her term ends in February of 18. Donald Trump has talked about the fact that he's going to leave her until then. That would be a major disappointment to me if that happened, as much rather see somebody who's much more of a free market person and a hands-off chairman be in there. That's likely to keep her from being that aggressive and missing a big opportunity. If we get a pickup in growth in here, there should be 5 or 6 increases in interest rates in this coming year, and I think we'll probably have 2. She says 3. Questions also, will there be a trade war? Will there be a war with Trump and Congress, as some things he wants to do are really very against the conservatives in there? Will there be a civil war here in this country? When I say that, I mean civil unrest, as Trump talks about deporting immigrants and building the wall and basically erasing the Obama legacy. And that could bring a lot of unrest and bother the markets. Then there's the question about Russia, and we see what's going on here at year end with sanctions. North Korea, and what a wild card there. Who knows what could happen? And in the Middle East, the Eurozone, that's absolutely huge, as there's an existential question about the euro, as that's really a very, very faulty currency. And we look at the potential for some big swoons to the downside in there. That's all guesses. I think investors are going to realize that Donald J. Trump policies are going to be a mixed result. And that when that happens, and they see that the battle between he and Congress, and that he has to act in ways to balance the budget and figure out how to pay for money he's spending, all that might just be revenue neutral. Add to that there is a kind of revenue recession going on in companies overall. And I think that the stock market is going to have a major decline into the summertime this year. Big decline. And I'm going to tell you right now what I think my numbers are going to be as we look at oil, gold, the dollar, the bond market, and the Dow Jones Industrial Average. So here's what I see coming for the 5 major markets in the coming year. And as I always do, prepared a slide for you to see. And you can see that there may be some pretty bold calls in here. First thing we're looking at is oil. I'm expecting the low of the year not to be that much lower, honestly. $49 is our projected low for the year, as we think that this geopolitical issues with Russia and the fact that they've stepped up now joining OPEC on trying to control prices, I think they're going to win on this one this year, and they're going to get prices higher. And there's a big inverted head and shoulders in there that has broken out and measures up to $76. I think that's about the area, which is also at an important resistance level that we're going to see oil move up to in the next year. Gold market, we think is going to be an inside year. In other words, not as low as last year, not as high as last year. Still, and there are good potential for some movement. We think that 1088 is going to be the low for the year. There's some support at 1115. It might hold that, it might not, but not get a whole much lower than that. And then making a high later in the year at 1316. And that rally is probably going to do really well for the GDX and for the gold silver stocks. We think as we have them on our best for the year, our list of best stocks for the year. The dollar, we think it's going to be a kind of a narrower year also, and not a good year for the dollar overall. We'd say the dollar is going to be down on the year, and that it gets down to about 98. If not for the euro issues, I would think the dollar could get a lot lower than that. But that might be late in the year that it does, or into the next year, where the dollar really starts to have its own issues. Right now, the euro currency's existential problems are likely to keep a bid in there, as I've mentioned before, a bid in the dollar as more of a safe haven. We think 105 is going to be the high, which is not very much different than where it's trading right now in the dollar. So just a little bit of an upside potential move in there. 10-year notes also looking for a quieter year, really. We think the low will be around 118 and that the high around 126, and that range in the bond market, in the ZBs, we think the low could get down to about 136.16. And then potentially get a bounce to the high of about 154.16. Overall, we think that the major trend in the bond market is lower. So we think that outside of the rally that we think we'll get, in the early part of the year here, the beginning of the year, first half of the year is probably going to be marred with a lot of potential declines in the bond market. Dow Jones Industrial Average, or the stock market, we think 2017 is going to be the year of a real bear market. That doesn't mean that we don't think it'll go higher and then lower. We think January could see the market move through the 20,000 area. The 21,485 might be very late in the year, or it might be early in the year. That's an important Fibonacci target for us. And so we think that the mid-year swoon that probably comes late first quarter into the June to August period takes it down more than 20% from that's high. We have a support number now at 16,350. That's going to be our target for the Dow Jones Industrial bear market low that we think is going to come in the next year. Well, what do you think about that? Bear market. So made a couple of bold calls. We think the yen is going to probably be the currency of the year, and that there will be a bear market in 2017, probably coming from disappointment over what Donald Trump could actually get done, and whether or not it's actually growth positive or not. So it's going to be an amazing year, as every year is. I hope you watched that promo that we had in the middle of the show that talked about our workshop, so that you can get a good reset for the coming year, or any time in the year. I think it's just an absolutely great thing to do. I share a ton of my history in there, and I think it's important. Here we are at the end of 2016. Who would believe that 2016 had come and gone the way that it had? I hope that it's been a great year for you, and if it's been a challenging year, then now's the time to be looking forward in a positive way, to get your feet planted firmly on the ground, to reach back into the resources that you have, look at your successes in your life, and know that you can move forward and plan in a very positive way. I am so thankful to my loyal viewers out there and our subscribers, and I look into 2017 with a ton of gratitude. Happy New Year to you and yours, wishing you health and joy. And I'm always wishing you great trading.